All right, thanks for joining me. This is Michael Bovee with Consumer Recovery Network and our YouTube channel where we talk about all things debt and credit. Today, back with me is Eric Olson from helpsishere.org. Eric and I did a video about debt collection and seniors and some of the things that are available for elder law and seniors to deal with collections and really to really help put you at ease and put some things out of mind that are not necessarily something you need to fuss about. But what about reverse mortgages? Today, we're going to talk about another senior topic. It's only applicable to seniors, reverse mortgages. So thanks for coming back on to talk about this with me, Eric.
You bet, Michael. When we talked last August, we mentioned reverse mortgages, and I think I mentioned that there's a lot of misconceptions about them. If you had asked me anything about reverse mortgages maybe 10 years ago or maybe 5 years ago, I wouldn't have known a whole lot. But I've learned a lot about reverse mortgages, and they can be a godsend for people. I don't sell reverse mortgages. I don't have a financial interest in reverse mortgages. I don't get anything from anyone from reverse mortgages. In Helps, what we do is we represent generally lower income seniors, a lot of them who have homes, and a lot of times when they consult with us, I'll talk to them and I'll realize that a reverse mortgage could solve their problem. And I've noticed over the years that a lot of them will say right off the bat, they'll say, "Well, I don't want that. I don't want a reverse mortgage." And I'll ask them, "Well, why?" And they'll say, "Well, I just don't." And I said, "Well, is there a reason?" "Well, my brother told me they were a bad thing, or I heard this about them," or something like that. They don't have a reason, and a lot of it has to do with maybe the history, and there's a lot of misconceptions about reverses.
Why don't we talk about that? So
sure.
We've got some bullet points that we want to hit on, and I want you to add to a lot of different information so people can kind of just pull the curtain back and understand more about the whole thing as an option for them. But what's the history? I mean, it's not a long history. What's the history of those?
Actually, they were formalized by Ronald Reagan, I think, in 1988. There was even some reverse mortgages before that, private, but they became part of the FHA process, government regulated in 1988. And the essential concept about a reverse mortgage is if a person has enough equity in a home, they get a reverse mortgage, it will pay off the mortgage. If there's extra equity, they'll give the person a line of credit, and they won't have a house payment for the rest of their life. And that's the concept that was put in place, and it stayed the same till about 2008, when the economy crashed and home values went down, and then things changed a little bit with reverse mortgages.
So what was if you could say, kind of to help dispel some of what happened then, what things are like now, what are some of the misconceptions about why a reverse mortgage is bad?
Well, the number one is people, they heard it from their friend, but actually, I guess maybe some people think that when they get a reverse mortgage, they no longer own their home, that the bank owns it, and they're just allowed to live there. That's not the case. A reverse mortgage is like a regular mortgage, except you don't make a payment. And you still own the home. You can sell it. You can do whatever you want with the home. You just don't have a house payment anymore. That's number one. I guess the second thing is maybe people worry that if the home doesn't sell for enough, their heirs will be responsible. That's not the case. At passing, if the home is not worth enough money, if it doesn't sell for enough, then no one owes any money. It's called a non-recourse loan. So there's no risk to anyone like that. I guess the other misconception is there may be some stories about people having lost their home because they got a reverse mortgage. I guess I know what they're talking about, but it really, it's not accurate. If you think about it, when you get a reverse mortgage, you no longer have a mortgage payment, okay? So you don't have to make a mortgage payment. The only thing you're going to be responsible for is usually the property taxes and the insurance and maintaining the home, okay? Now, if you have to leave the home for whatever reason, there may be a requirement that you have to sell the home within a certain period of time. But people losing homes in reverse mortgages, about the only time that will happen, and there's ways to even prevent that, is if they absolutely refuse to pay property taxes on them.
So they get foreclosed on, not necessarily by the lender or the reverse mortgage servicer, but more for state taxes.
Yeah, although the reverse mortgage lenders are getting more sensitive to that nowadays. They get nervous if they start getting tax bills and they're not being paid.
Right, so they're on alert. Those are some of the perceived objections. What are some of the benefits? What's going on with a senior, somebody who owns a home, who has a little bit of equity in it, to think about why is it that a reverse mortgage is going to work out for them? What are the benefits?
Okay. And I might give you an example here too. Okay, so I primarily work with lower income and poor seniors that have limited incomes, and a lot of them have a house payment that's relatively high in relation to their income. And they're essentially living in poverty because they're making a house payment, but they've got significant equity in their home. So I'll give you an example. Before this interview, I called a fellow that I knew that got a reverse. That's part of our program. His name's Ray. And I know him. His wife is disabled. Together with his wife, they make essentially just Social Security, and it's about $2,100 a month. And their house payment was around $1,000 a month. And his wife is bedfast in their home. They had significant equity. When he joined the program, I told Ray, hey, a reverse mortgage would really work for you. And he said, well, my credit's bad. In fact, I have 4 judgments against him. 4 judgments against me. And I said, well, we might be able to work through that. And he got a reverse, and I talked to him this morning, and I asked him, what was your feelings about this reverse, Ray? How's it been? He said, it saved our life. It gave us freedom. He explained he got his mortgage paid off. He no longer has to pay the $1,000 a month house payment. He got a line of credit, did some repairs on the house, and he told me, I still have a lot of that line of credit left. I need to put a new furnace in. I've got the money to do that. So he was very grateful for the reverse. Solved his problem. You can imagine. He was living off $1,100 before. Now he's living off $2,100. If I remember, for him, the reverse, he had enough equity in the home, the reverse was able to pay for his anticipated property taxes and insurance payments for the rest of his life. So both he and his wife can live in the home to the day they die, and they'll never have a payment on the house.
So that takes a lot of stress and pressure off for somebody that is already experiencing some kind of hardship, medical or otherwise. But you and I both talk to people on a regular basis that it's they're maybe a house rich, credit score, not
right.
They don't want to move, they don't want to sell the home, but they need something, monthly cash flow infusion, just to pay regular bills or to get medication or to even sometimes eat.
Right.
So
they could take the money in a credit line, or they can get a certain amount each month. They can choose to pay back the loan if they win the lottery. There's no taxes on that money because it's a loan. They don't have to pay taxes, and it's a good deal for people. Now, not for everyone, but especially for people that are having hard times making ends meet. They have to qualify for a reverse mortgage too.
Yeah, that's what I was just going to ask. What are some of the qualifications? Okay. Obviously, age related.
Right. You have to be a minimum of 62 years of age. Okay. Your spouse can be younger. Okay. There's provisions for that. The big thing is you have enough equity in the home, and a rough estimate is you have to have at least 55% equity in the home. So an example is if you got a home that you owe $100,000, okay, or that's worth $100,000. If you owe $45,000 on it, you'll have 55% equity in the home, and you can get a reverse mortgage to pay off that mortgage. They changed that about 2 years ago. What happened is when the house values went down, the requirements were less strenuous, and a lot of people were able to borrow more money, and the government was getting hit because they were getting these homes back. So now they've tightened up the regulations, and not everyone has enough equity in their home to qualify for a reverse. So that's the main thing, is you have to have at least 55% equity in the home. Now, as you get older, you can have less equity in the home because it's based on your life expectancy. So a person that might be 70 might be able to have 60% equity in the home and qualify. They'll get a bigger benefit the older you get through a reverse mortgage. Now, the other thing I guess I should mention too is, at this point, is that it's based on an approval process. It's not based on your credit score, okay? The only reason they look at your credit is to determine if there's going to be a set aside for property taxes and insurance, okay? So it is better if you've got better credit, because then you may not be required to have that set aside for property taxes and insurance. But like the example I gave earlier, Ray, he had 4 judgments.
Yeah.
Because I'm an attorney for many years, and I was able to get hold of my old law firm, and I told them what to do, and they were able to get those judgments removed for this particular guy. And so, it worked a miracle for him. It was really successful.
That's significant, because a lot of times people are looking at what are their options to bridge, their monthly cash flow, and if their credit's not great, a lot of doors close. So this is a way to make sure that you have one open. Again, equity requirements.
You don't need a tax return. It's a fairly simple process.
So
you have to go ahead.
How does that work as far as how does those funds dispersed? So I'm a senior. I'm watching this video and I'm wondering, that could be me. I might be able to do this, but what can I really expect? What kind of money on an ongoing monthly basis can I get from that?
Well, the first thing is going to pay your mortgage off. That's the most important thing, if you have one. And the second thing, you will get, if there's enough equity, you can take the money in several ways. You can get a line of credit. You don't have to take that money out when you make the reverse, but it can be sitting there. You don't need to use it, but it's available for your use. And actually, that if you don't use it, the amount that's there will go up each year by the interest rate, and that's available to you. Or you can actuarially, you can get a certain amount of money for the length of your lifetime that's projected, maybe an extra $400 for 15 years. So that would be added to your normal monthly income, and instead of, if your income was $1,500, now you get $1,900 a month.
But so it's key to point out here,
if you get the money.
If you were already making a $600 mortgage payment, not only are you not, that's like an infusion. Now you're keeping that $600 instead of making the payment, so you're paying yourself your mortgage payment for intents and purposes, but you're also maybe able to add to that another $400 on the actuary. Yeah,
exactly. Or if you don't need that, you can just leave it in a line of credit and not even tap on it. Have it available for future use.
Awesome. So next, what about a reverse can you get a reverse mortgage on a mobile home or, the land?
Yes. There's requirements. The mobile home needs to be 1978 or newer, and it can't be a, quote, a mobile home. It's got to be on some type of foundation secured to the land. And for any reverse mortgage, it has to go through an appraisal process. So, if it's a really dive, you may not be able to get it. But as long as it's habitable, decent shape, doesn't matter with a reverse mortgage. I'll also point out that a lot of people have condos and they want to know if they can get a reverse mortgage on a condominium. The answer is yes, if the condominium is FHA approved. How do you find out if it's FHA? Your condominium association may know. You may know yourself. And I have contacts that can find out for people if it's FHA approved. It's pretty easy to find out.
Okay.
I would say that a minority of condos are FHA approved.
This is a good point to bring out. Here we're talking about this, and much like the prior video about how elders and senior citizens and people on disability can get help, very affordable, exceptional help with dealing with debt collectors, and your contact points are on that video. Why don't you go ahead and give those out right now, and we'll put them on the screen as well for viewers. How do people get in touch with you if they have questions about these kind of things?
Okay. So what helps is we're a nonprofit law firm that represents seniors on Social Security and disabled persons, Social Security, disability, pensions, VA benefits. All that money is protected by federal law. And we represent seniors who owe debt that they can't afford to pay. And that money is protected under federal law. It cannot be taken from them. And if they don't pay the debt, they get harassed or contacted by collectors, make their life miserable. Under federal law, if a person is represented by an attorney, collectors can no longer call them. So that's what HELPS does. What we do is we represent seniors under the Fair Debt Collection Act, so they have an attorney to receive communication from collectors so they don't have to deal with collectors ever again. And in that process, we talk to a lot of seniors and we talk to them about other things, and I find out that they've got a home with significant equity, and so we'll tell them, hey, you may want to consider a reverse mortgage, and I'll explain to them how it works. We don't do reverse mortgages. We don't have anything, we don't benefit financially from them, but we just talk to people about them so that they can know about it to be able to benefit them. I'll say this. There's a lot of ads about reverse mortgages. Get on the internet, on TV, you'll call on the phone. A lot of times you'll get a phone bank. And a lot of these phone banks may cherry pick the reverse mortgages and get ones that are, quote, slam dunks. A lot of the people we work with are a little bit more difficult cases. They're lower income, maybe less equity, maybe some other problems. I met a guy a few years ago at Aging America Senior Conference, and we refer a lot of cases to him and other people that do these as well that can work with seniors, and I trust them to be able to work with our clients and do a good job for them.
Deals that are hard to get done, you have to really sometimes work with somebody who knows how to roll up their sleeves. I liken it sometimes to when you're just going for a regular mortgage and you walk into a bank and the bank is there, they've got a loan officer sitting there, and they just get foot traffic because they're the bank. And they don't have to work for it, so they don't really know all of the ins and outs of how to get a difficult loan through. Whereas if you go to an independent mortgage broker who's used to having to earn their living and get difficult deals done. So you've got somebody that you consistently have been able to rely upon to get those difficult deals done?
Yeah, I do. Okay. And he doesn't give me any money. I don't give him any money. I trust him. I trust him because he does a good job for the people we owe. But there's other mortgage. We refer to other reverse mortgage companies too. It's good to have someone that you trust and you can rely on.
Well, listen, I've got your number that's going to be up on the screen when people are viewing this, watching it back, so that I want people to know that they can reach out to HELPS and talk to people about, hey, I watched this video, what can you help me do, or how can you give me some direction, maybe get their questions answered, and that's okay for them to call?
Oh, sure. I'll talk to anyone. If we can't help them through the HELPS program, if they call about other issues, we try to refer them on and get them in the right direction to where to go.
Awesome. So any final advice for a senior citizen that's looking at, hey, this may apply to me and it's an attractive thing. Is there other things that you could recommend that they look for or look out for when they're out there shopping for a reverse mortgage?
Well, I think they need to understand that what a reverse will do for them is, give them, stop the house payment, give them extra money to live on, and they'll still have an inheritance for their kids. Hopefully, home values go up in value. The law changed a few years ago, and now you can't have as much. You have to have more equity in your home. So for most people, when they pass on, they're going to have enough equity in their home that the kids are going to be able to sell the home and pay off the reverse and have inheritance for the children. Okay. Practically speaking, reverse mortgages, when you pass on, your heirs have about a year to sell the home. And if they can't sell the home, no one owes any money. Okay, it just goes back to the bank. If you owe a whole lot more money than the home is worth, the family can buy the home back for 95% of the market value. So, for example, if a person owed $200,000 on a reverse mortgage, and for whatever reason it was worth $100,000 because the market had gone down, maybe they got the loan back in 2007. The family could literally buy the home for $95,000. They don't have to pay $200,000 to get the home. So, bottom line is, it's a good deal for a lot of people. I can give you another example if you want, or someone that just recently hired one of our clients. Would you like
please.
that?
You bet.
Yeah. Okay. So, I got a call a few months ago from an elderly lady. She was in her 70s. I'll call her Loretta. Her husband had left her. She had been married for a few years. His name wasn't on the home, and she was going through divorce. And she had income of about $1,800 a month, and her house payment was $800. And she had, like I said, a lot of equity in the home. And I mentioned a reverse mortgage to her, and she said, no, I don't want to do that. And I said, why? And she couldn't explain why. And I said, well, listen to me for a few minutes. This might solve your problems. And I explained to her how a reverse would work. I just heard from her. She qualified for the reverse mortgage. It paid off her mortgage. She no longer has an $800 house payment. She's got a line of credit for $33,000. Okay? And she's thrilled to death. Okay? Thrilled to death. She's got $800 more in her budget each month to be able to live off, plus a little line of credit she can use for things that she needs. So, that, it works. The other thing I think people need to know about reverse mortgages, Michael, is they're heavily regulated by the government. It's not like you shop around for a reverse mortgage, you're going to get a different product at different places. The interest rate's the same. The closing costs are the same. The only cost to get a reverse mortgage, the industry standards person would pay for the appraisal fee, which is usually like $400 to $500. Although some reverse mortgage brokers will agree to front the appraisal cost. They take a risk when they do that if the person doesn't qualify, but some will do that, especially if maybe the person can't really afford it and there's clearly enough equity. So people don't need to worry. This is not it's hard to get scammed with a reverse mortgage. They really can't. But it is better that they get someone that's, especially if they're lower income and maybe there's a question about equity, that they might choose to get someone that has a little bit more experience in handling a reverse mortgage so they can see that they actually get one. So it's a great deal for consumers that need it. Now, obviously, if you can afford your house payment and you've got plenty of money, reverse might not be the answer, because if you do a reverse, you have to pay closing costs. It's like a regular loan, but you got to realize the closing costs come out of the loan. The only one that hurts in a reverse mortgage, really, in my opinion, for a senior that is tight and has less income, is the heirs. The heirs may get a little less money when mom and dad dies, but mom and dad are going to live a more comfortable life. And I tell clients that are uncomfortable about a reverse, I'll say, your kids would want you to live these senior years not worrying about money and having enough money to take care of your needs.
Absolutely.
They're not going to care about how much money they're going to get when you die.
100%.
It's because of the new regulations. They're still going to be able to sell the home and get somewhat of an inheritance. So don't worry about it. And you don't have to draw all the money out of it.
There's some left. It's important, really, because what you described is the couple of instances that you even brought up today. Taking the edge off, especially at that age when you're not out there being able to, go out and get another job and work and bring in more income, tapping into what you have and what you've built for your life so that you can take the edge off and live more comfortably and without that kind of stress. That's usually an easy decision to help people make.
One other thing I just brought up, I thought of that. When you make a reverse mortgage, let's say you're a widow and you have significant equity, you want to you don't necessarily need to draw all the money out. In fact, your closing costs are based on how much money that you draw initially. And if you leave a lot that you don't draw out, that's not part of the closing cost, and it makes the loan less expensive for people. So I worry sometimes that maybe an unscrupulous reverse mortgage person would tell someone, well, draw it all out right now. That way they get a bigger commission, so to speak, because the person drawed it out when they didn't really need to do that.
That's awesome. That's definitely something should be aware of. So, Eric, thanks so much. And again, thanks for the wonderful work that Helps does. Again, you can find Eric and his group at helpsishere.org. You can contact them at the number that we had on the screen. And I'm looking forward to even the next video we do.
Okay. Thanks, Michael.
Awesome.